What if your account balance is half or even 30% less than what it was when you started? Hi, I'm John Stevenson, the Guaranteed Retirement Guy. Let's talk about single payout versus joint payouts. Because with annuities, the payouts are different for each of these, and it's important to talk about it. So whether you're married or not will obviously determine whether or not you will pick a single or a joint payout. But a lot of times, those of you who are married will still choose a single payout. Why is that? Well, of course, single payout usually pays out more most of the time. Joint payout usually pays out a little bit less because the insurance company is on the hook for 2 lives. So if you have an annuity contract that's paying out guaranteed income for the rest of 2 people's lives, you know, that carries more risk because one person will probably live a lot longer than the other, especially if they are female. That's why joint and single payouts differ so much. A lot of people, though, want the single payout because they want the higher payout, which I can understand. But the problem with that is if you do have a spouse that relies on that income and you die early, what if your account balance is half or even 30% less than what it was when you started? Keep in mind, these annuity contracts, they pay out guaranteed income regardless of the account balance, okay? So if it's a fixed index annuity with an income rider, usually those account balances will deplete over 15 or 20 years. What happens if you die at 20 years and there's 0 in that account, but you're getting 50 grand a year in guaranteed income? Well, your spouse won't get that income anymore. Versus if you had picked a joint payout of maybe $45,000 earlier, yes, it's less income over time, but then of course at the end of that 20 years, you pass away and your spouse lives another 15, they will continue to get that $45,000 per year for the rest of their life. Now, maybe your spouse is self-sufficient and they have plenty of assets. Maybe you have your assets separated. I have people that reach out to me and they're like, I've got my income from this, my spouse has their income from over here. Well, in that case, there's nothing wrong with a single payout. You know, take the most money that you possibly can. And of course, it's going to benefit you and it'll benefit your spouse. And if your spouse has their other retirement accounts that are providing for them and they're not going to be hurt when your single payout ends, then that's fine. Okay, there's nothing wrong with that. And of course, if you die when there's money still left in that account, your spouse or whoever the beneficiary is going to get whatever is left in that account. Okay, the insurance company does not keep it. Unless of course you do a SPIA, just a straight life SPIA, then of course they'll keep the money. So usually when people want an annuity and they want to make sure they can leave some money behind, they'll either pick a SPIA with a cash refund or a fixed index annuity with an income rider. But joint payouts, if you're married, rule of thumb, pick a joint, okay? That's just usually what most of my clients will do. But there are scenarios where it's not the best solution. Okay. I have clients that sometimes they're 20 years older than their spouse. And when they do a joint payout, it's really, really low because it's based off of the younger spouse's age. And so they figure out other ways to make sure that their spouse is taken care of. A lot of times what you can do is you can purchase an annuity that has a single payout for yourself. And of course, you and your spouse are enjoying it as long as you live. But maybe you also purchase another annuity that is deferred that will then kick in once you die, and your spouse can then activate that for themselves. So that is a way to do that. And you can actually do that with a lesser premium than the one that starts immediately because it's deferred out for, however many years it takes you to kick the bucket. So just a suggestion there. It is a good way to cover yourself. Now, if you're thinking you might die before your spouse and you've got a higher Social Security payment, when they put that in place, they're like, all right, well,
we'll give you both of your Social Security payments, but if one of you dies, we're just going to give the spouse the higher of the 2, okay?
So if your Social Security is higher than your spouse's and you die, they're going to get your Social Security, which is good, but they're going to lose theirs. And so if that's going to cause a problem, that income gap, which it usually does, then it would be a good idea to set up a smaller annuity that will grow for 20 years that they can then activate to replace their lost income from their Social Security that they lost because they lost that in favor of yours. Anyways, lots to think about. You've got a single and you've got a joint, right? You choose. I don't think either option is a bad option. It just depends on your situation. It depends on your assets, your spouse's assets. If you're single, then this is just easy. It's a single payout, right? But if you're single and you're thinking about getting married, you can still purchase an annuity and not choose a single or joint option until you actually decide to take income. That's what's nice about, especially with an income rider that's growing at like 7 or 8% every year. You can still get that growth that's guaranteed for the, let's say it's for 5 to 10 years. You know you're not going to take it, until you're 65 or 70 or whatever age you decide. But between now and then, you might get married again. You're thinking, well, I'd like to make sure that if I do get married, my spouse gets that payment as well. Well, that's great. You can do that. Fund the annuity contract, let it start growing for you. And then when you decide to take income, at that point, you can then decide the joint or the single payout, okay? And if you do think you're gonna get married, you and I will both look at the annuities that will work better for joint versus single, because there are annuities that are catered to single versus joint. And so we'll compare both of them. And if you really feel strongly that you probably will be married and you will have a joint payout, then we'll look at the ones that will give you a really, really good payout for joint. So you don't have to pick a joint. If you end up not getting married, you can still select the single payout. So that's what's so nice about these. With fixed index annuities, with income riders, they're so flexible. You can decide when you take income. You can decide to wait longer, take it sooner. You can decide to either do single or joint. You can change your mind about that. Like, it's so nice. With a SPIA and a DIA, you can't. It's irrevocable. You make that decision right in the beginning, and you can't change a single or a joint. It is what it is, okay? So anyways, I hope that helps. If you like the videos that I'm producing, I really hope that you like and subscribe, and I hope you share it. And if you want to talk about purchasing an annuity with me and you want my help to be able to show you everything, I'm very transparent. I show everything that's on the market. Okay, I don't care what the commissions are. If the commissions are low and the annuity is paying out the most for you, then I'm gonna show it to you, okay? I wanna make sure that you have access to everything, okay? So it's in favor of you, not of me. So I'm happy to help. And if you are seriously thinking about purchasing an annuity and you need some help, then please book a call. There's a link below this video. It goes straight to my calendar and I'll answer all of your questions. So thanks again for watching, and we'll see you next time. Hey there, just wanted to ask you, if you had your question answered today, could you let me know? Would love to hear from you, and look forward to chatting with you.